So in this next episode of Lansing Michigan Life, we are continuing the conversation with 𝐿𝐴, one of my preferred lender partners. We're going to be talking more about rates, about why they should choose a local lender. So you definitely want to be able to see the continuation of this conversation because it's going to be super beneficial to all of you looking to make a move here. So again, if this is your first time to the channel, my name is Troy Seifert. I'm a top producing realtor in the greater Lansing, Michigan area. I help people from all over the country, even all over the world, help them make a smooth move to Lansing, Michigan. So whether you're looking to move here in a week, 2 weeks, 5 weeks, whatever your timeline is, I'd love to be able to talk with you. So feel free to contact me. All my contact information is in the description below. You can call me, text me, email me, or schedule a Zoom call with me. Also, my preferred lender, Sunbear, who is with me here again, his contact information is in the description as well. So Joe, thanks again for joining us here today, and we will continue the conversation here. Talking about products, I want to kind of transition because there's people that are watching this channel. Some of them have invested in new construction.
Yes.
I know that people that have watched this that like actually got a new construction home, they did their loan through you, and they found out like when they originally were going to do it through you, and then when they decide to do new construction, they're like, oh, DART's one of our preferred lenders.
Yeah, that worked out conveniently.
So why don't you kind of talk about DART's presence in new construction, how that kind of works for people who are looking into new construction?
Not just that, I'll touch on renovation too, because I feel like it's the same topic. So there's really 3 things we should talk about. We have a full-blown new construction, and we could pair that with a vacant land loan too. But basically, if you say, here's this raw dirt, we want to build on it, and we're using a custom builder, we can help you with buying the vacant land. We can help you with doing a traditional construction loan with a custom builder where they're going to draw upon that loan so that you don't have to, fund it, and they don't have to, if the builder doesn't have the capacity to do that. Most builders do require a construction loan. So we can help with that traditional, and that's one thing I think people are surprised about is it only is 5% down on the construction loan. Some people think at this point you need 20% down. You don't. 5% is fine. So that's your traditional construction loan. Then we have like end loan financing. That's not really construction financing. I'm working with a bigger builder, a production builder, a semi-production builder. They're going to build the house for us and turn it over to us and say, hey, Troy, the house is ready. You can close today. That's just an end loan financing. That's pretty basic. It's just your traditional mortgage. But then we can also talk about renovation. So you have a house, let's say the existing home, but all the windows need to be replaced. And you have your money set aside for down payment, but you really didn't plan on $20,000 of window replacement. That's a renovation loan that we can easily fold into an existing purchase. And it doesn't affect your rate. It doesn't affect your terms. It's really for more simple projects, roof, countertops, flooring, not like huge structural changes. We can do a full construction. We've done many renovation loans where you buy the home and you're like, I want to add a second story. I want to do a full-blown kitchen and bath remodel. Typically, we recommend that you just do a typical purchase because the market's not going to wait for you to get your plans and specs, and the sellers wants to be done with it. So typically, we just do the purchase, complete that, give you a few months to get your everything in order that you'd like with your builder, your custom builder or contractor is going to help you with that. And then we can actually fold that renovation project into a construction loan.
Okay.
So you have a lot of, we pretty much can, any situation we can kind of fit a renovation or construction.
Yeah. And I mean, I think for those of you watching as well too, again, they are the preferred lender through some of the neighborhoods that maybe you've been checking out, that you see some proposed new builds. They're going to be the lender to use. And so again, it speaks volumes that places like builders or corporations that build homes trust you guys because they know that you're going to get the job done.
I think it's the stability of good feedback from our customers.
Yeah.
And the realtor partners and the real estate community. And just, I think it's, there's nothing magical about what we do. It's just, we do what we say we're going to do. We close on time, and we try to use local appraisers, title companies, and making sure that it's situational, makes sense. So we're not having, an appraiser come that doesn't understand the local market in any market, not just here, but if we're in a different market, we want to use local. It's very important to use local appraisers so that consumers get valid information, so they know the report they're getting is accurate.
So getting away a little bit from product, I want to talk about a myth that I feel it's a myth. Maybe you can tell me it's not a myth. I don't know. But something that I hear, and I'm sure people out in internet land have tried, is they hear like, okay, get with like 2 or 3 different lenders, and then the lender quotes them a rate, and then another lender quotes the rate, and someone else quotes a rate. Is having like a different rate, is that like something that's common with lenders, or is it something where really the rate should be the same, but sometimes they're trying to get the rate down and there's like a little asterisk like, hey, by the way, consider this. What are your thoughts on that?
That's a really good topic. And I'll tell you what I just tell every consumer that we talk about. A couple things, like just to get out of the way. So you have certain products like 𝐷, the rate's going to be the same no matter what. It's a statutory, this is what they're offering, type of thing. But when you get into the mortgage-backed securities, like we said, VA, FHA, Fannie Mae, Freddie Mac conventional loans, most of the source of those funds are coming directly from Fannie Mae, coming directly from Freddie Mac, coming directly from FHA servicers. So it should be very similar, I'll say. The rate won't be exactly the same and the fees won't be exactly the same. But it's been my experience in this mortgage era currently that bank A to bank B to bank C should be very similar. And I think what's really critical, what I try to educate and talk about with my customers is if they say, hey, I would like to get, I'm going to do my research. And I say, I think you should do your research. I think that's excellent, thing to do. If I were you, I would find a credible another lender, talk to Troy. He might have, someone for you, or do your research and then get some basic information, scenarios at the beginning of the process, compare the two fee wise and get a, feel for who you're going to work with better and what kind of service level are they going to be available when you need them? Are they going to be available Friday night to give you a scenario when you're making a decision at 7:00 on a Friday? What's the service level going to be? Because that's going to be important. If you can't get a hold of them over the weekend and you're trying to make an offer on a home and you have no idea what the payment is, that could be a problem. But once you find the right people, really you need to compare it once you're under contract. So if you have a preference, this is my preference, this is the other person that I'm kind of I'm interested in getting a rate quote from, you almost have to look at the exact same situation. So now maybe you just went under contract and when the closing date is and all the terms, exactly what your down payment is and closing date, then that's your final, I would say, if you haven't eliminated the banks, that would be your final time to do that, because now they have to, you would want a loan estimate given that date, that day, and do it on the exact same day. Because if you call a bank, credit union, mortgage company and say, I'm buying a house in August, I don't know what date, I don't know what house I'm buying, what's your interest rate today? They can tell you really whatever they want to without they don't have to back that up. There's nothing really, they're not guaranteeing that rate. They're not even giving you an estimate of disclosures. So at a minimum, you'd want a loan estimate saying, this is the rate today, these are the fees today. We can give you scenarios through the whole process, but once you have a house identified and a date of closing in the loan amount, well, then we have to send you disclosures and we actually have to back that up.
So now we can include this product in here because there was a product that I didn't know if you were going to bring it up or not, but another product you offer is a portfolio loan.
Yes.
Which is somebody who maybe they aren't a W-2 employee.
Yeah.
And they're self-employed.
Yeah, that's a good example.
Try to make something work. So do those rates then vary? Because you were talking about conventional.
That rate can vary from bank to bank. First of all, some banks just don't do them. But then you'll see a variance, a big variance of this is what we can do because it doesn't meet the conventional guidelines for Fannie, Freddie, any of the loan products. This is just the bank doing the mortgage. Then there's no back investor. So that rate would vary from bank to bank. But I find that there's only a few banks that do those kind of loans.
Yeah.
So, but you can research that for sure.
Well, then I think if somebody doesn't have a credit score,
yeah,
because there are some people watching this that don't have a credit score,
yes,
then you guys have a portfolio loan to
we could do that. But actually Freddie Mac has a product now.
That's right. I think I saw that.
Yeah. So now and how they handle the rate on that. So the other thing we didn't talk about is, So let's just say you're approved for a Freddie Mac, for example, a conventional loan. Maybe you're doing 10% down. Your rate can vary dramatically based on your credit score. So there's these loan level pricing adjustments. So if someone has a 780 credit score compared to 660 credit score, their rate will fluctuate dramatically. So a lot of times when someone calls and says, hey, what's your rate today? It's a very difficult thing to answer. We can give just ideas, but it's like, I need to know what your credit score is. I need to know what your down payment is. I need to know what your debt to income is. There's a lot of factors that can play in.
And you guys are pretty thorough with that process too.
Yes.
You could call Joe Schmo and they'll give a pre-qual.
They will.
You know,
and
which is
a
really,
rate and a payment.
Oh, you say this?
Yeah.
Oh, you make $1 million? All right.
Yes.
You know,
That's right.
And I joke about it, but really like that can happen,
Oh, yeah.
you know, as well, because then they have to verify things. So, I mean, you guys kind of go through the verification process. I mean, that's huge because especially like if you are presenting an offer to to somebody else, to a seller, and you have a reliable lender there and they know that they've done the vetting, that's huge.
It's huge. I think it's huge because one, your offer, like if you have us as a pre-approval letter, if the selling agent and the seller already have a comfort level, that's helpful. That's huge. But I think more importantly, what we're providing to the customer of this is your payment. This is your taxes. We estimate conservatively and know like what your real taxes are really going to be, or it's very likely to be based on, obviously inflation can affect it, but just the likelihood of what the taxes are going to be, real estimates, even if it's just, we want to be transparent. Even if it's not something you want to hear, we want to say like, this is what this situation is going to be. We take a lot of pride in like our scenarios, making sure. So when you go to that house and you're ready to make that offer, you can buy so much more confidently when you know, oh, we can do this. This is not a problem.
Kind of leading into what I want to talk about next, like, because we were talking about like some advantages of using someone who's local. So why should someone choose a local lender, even if they're from like out of state? They might have their bank that they're comfortable with. They feel like it's easier to do that. Why? Like, what are some other reasons why you feel like people should choose a local lender? Other than like their big bank, like some of the bigger banks out there, like Chase and Bank of America and Wells Fargo, and those are some of the big banks nationwide that I can think of. But what's your take on that?
It's all situational, so I don't disparage any other bank. We have access to the same financing, so it's all coming. Like I said, most of it's coming from Fannie and Freddie and the different places. So you don't lose out because you've worked with a local bank. Typically, I also think just the local knowledge of how the millage works and what's customary for fees, and I think you can give a lot more feedback to the customer that can be helpful. If you're if that person, the mortgage banker you're working with, it's not even the institution as much as maybe the mortgage banker working at that institution, a combination of the two things of, do they understand how to calculate the future, like what the taxes are going to be? Do they understand some of the dynamics of local customs of how they're going to do the tax expiration? How do the purchase agreement, what it's going to read and what's typical for this area? When you find a local lender, I think they have the relationships and they can help give guidance to that, like some things to consider when they're looking at, like, I've seen that condo development. I know there's a problem with that condo development or what, situational. Now, I will tell you, there has been times where things have crossed my desk and a customer said, hey, Joe, I've worked with this institution for a long time. This is what they're offering. I have this scenario. What do you think? And I always tell them, I said, send me it. Let me look at it with you. And I'll tell them like, wow, this is a good situation. I think you actually should do this. I've seen the situation. I know the house situation. You're putting a significant down payment. Your approval is pretty clear, and they're giving, this just happens that it's a good situation. I will tell them, I think you should run with that. And I think that's the kind of, because we're not in the transaction business, we're in the relationship business. And so we want them to, if that's best for them and like the whole situation, we don't want to interfere with that. We want to help, we want to give, and we want them to, call us next time and say, hey, Joe, I want to get your feedback on that. And I'll be helping their family and friends and everyone else.
So yeah, and those of you who've been watching my channel for a while, I bring up the taxes all the time. You're like, it's really going to bring up the taxes, the property taxes in our area. And you made a really good point when you stated that like having a local lender, they're going to know the Michigan uncapping rule, if you have somebody that's outside the state, they might be able to show you like, hey, these are what your taxes could be, might be, but unless they do their research, they might not tell you, hey, a year down the line, these are what your taxes could be, which a realtor should be able to help, tell you, which I do. But then also your lender should be able to be like, oh yeah, they're right. Like this is what, we got to put enough money in escrow so you don't have a shortage and you don't receive that like property tax bill the next year and you see you have this huge escrow shortage and you have to owe thousands of, maybe thousands of dollars because of the rule that Michigan has where you can make the taxable value go up to half the purchase price. So having that local lender, I feel too.
And actually that's a good example. I can give you a real life example that just happened in this past a few months ago. I had a customer call me and said, hey Joe, I bought this house 2 years ago and our escrow went up, which is not uncommon. I mean, insurance changes, taxes can adjust even after the uncapping. And so she said, hey, I just want to confirm this and that. I said, yep, that's right. This looks good. Everything's fine. But then I went into the taxing record, reviewed it, and said, hey, I think they made a mistake on your uncapping. And I said, I think you need to call the assessor and just make sure everything's fine. And I would do it right away because the deadline was occurring. And she called me back 2 hours later and said, I took part of the day off. I actually went down to the assessor and they adjusted my taxes. They were doing it incorrectly. They just made a simple mistake. And I think it was, it changed $2,500 a year. That's a big deal to that customer. And that's the kind of example of like, you could have done that too. Like if they had called you, Troy, and said, hey, does this seem right to you? Because we're not just transactional people. We want like them to be in a good position going forward.
Right.
And that's, I think, maybe the difference. Because I don't know if they would have called the national lender and said, hey, I don't know if they would have taken that next step and said, let me just look quickly at this for you and just see if there's something that could be done. It's not our responsibility necessarily to do that. But I think those are the other things. If we can add value to our customers and situation, we want to do that. And you don't lose, we don't charge you an application fee. We don't want to work with like, oh, you have to use us and Troy and I are going to do this together. That's not how it is. I have a fiduciary role. Troy has a different role to play in the transaction. We want to work all together as a team. And if I can be part of that, we really appreciate the opportunity to help you do that. If I'm not part of that, I'm still going to make sure we do everything we can to help. And that's how we like to operate, where there's no commitment and you can see everything transparently and you can decide what's best for you and your family.
So kind of like ending this good discussion we've had, I'm curious because you talked about a story that you had where about the property taxes. Do you have a story? Because everyone's so focused like on the price right now with like, oh, my price might not be high enough. I got to give the highest price. Do you have a story where a buyer client that you had put an offer in on a house and they might not have been the highest offer, but because the list agent saw Dart Bank, your team, whatever, that it helped them seal the deal? Do you have any stories?
I have several stories. We don't probably have enough time for that, but I can tell you one just happened. I had a local partner that I've worked with for years. It was a competitive situation, and we sent a very solid standard pre-qual, pre-approval letter. We sent it over. The listing agent did recognize that this was, satisfactory. The agent had, communicated the information. I had communicated information and followed up quickly and did it quickly. We found out later that they had a cash offer that was higher than this offer. They felt, and there were some other intricate details like occupancy date that matter to the seller.
Yeah.
And that's the key is like when you work with good partners, it's not all rate. It's not all price. There's emotional things that are going on with a seller. And that's why I think in the timing of everything, it's not just price or cash or this. It's a combination of what's important to you, what's important to the seller. And I was actually shocked that they did this, but really there wasn't much risk because their financing was in place and everything worked out for the seller, worked out for the buyer. So that's an example. But the other thing I would like, another story, if you don't mind, of the difference, I would say as well is I had this mother-son situation where they were living in a home, but they wanted to get out and to have a little more property. And the house was, and this is affordability kind of conversation, but the house was double the cost of their current house. And so we looked at it, and just on the face of it, it didn't totally make sense. They're like, well, your payment's going to go up pretty dramatically. But then we looked at the situation differently. I am a CPA and, have a pretty good financial background. And more importantly, we took the time to sit down, and then we pulled out all the information and said, okay, well, you have quite a bit of equity in this house. You really want this. This is like important to you. This is the move you want to make for you and your family. And we ended up paying off some debt, like just short-term debt that they had, that they just didn't have a lot of planning with some of the debt. And so some of this is debt management. So they paid off some short-term high interest rate credit cards and some things like that. They were able to use a bridge loan, bought the other house. And when it was all said and done, they ended up having savings for the first time in their lives. Neither of them ever had savings, like a substantial amount of savings. They had a substantial amount of savings, and their payment, their cash flow was actually, even with a higher mortgage payment, was improved dramatically, like, over $1,000 less a month. Yeah. And it was just someone actually sat down with them in person. We actually sat down, and we could be done via Zoom as well, and sat down and actually said, what are you trying to accomplish here? Not just like, here's a transaction. And we structured that totally differently. They sold their house, paid off the bridge loan, everything worked out fortunately. And it's those kind of things. It's like, it's not always about just that one transaction. And I think that's, unfortunately, both realtors and lenders can tend to like be transactionally focused and like not looking at the overall, what's this family's or what's this person's goal? Like, are we actually meeting the objective they've laid out to us? Are we listening to what they're saying? Are we trying to match and put them in a good long-term position? And I think that's the difference of working with good people. Yeah.
No, that's like, and I know the thing that I enjoy about your guys' team is that you have a set process in place.
Yes.
So Joe's the go-to guy.
Yes.
But then there's like a team of people that if you can't be available, like there's other people a part of the process. So you're not like, I've had people who have had to like give repeat documents because it changes from loan officer to somebody else. And they're like, I've already given this like document
multiple
or three times,
yes,
right.
And
at least
it can be frustrating.
Yeah. And I mean, you have a portal as well too,
yes.
that if people go on the website, which I think I have in the description below, like they go on that website, you fill out the application online, yes. You can upload everything there. Team has access to it. Everybody, can view the same
we
thing.
Have, like multiple people who can do what I do. So like if you need a scenario last minute and I'm tied up with another customer, we can get that to you. And you have our cell phones. You can text us. Even my loan transaction coordinator, you can text, and she'll be kind of one person from beginning day one to the end. I think that in itself, being able to communicate to all of us and get feedback, because it could be very minor thing, but it could be really important to you and making sure everything closes on time. We take that responsibility importantly, but I think more importantly, I want to give you as much information. I think people think like, oh, I bought a house, now I need a mortgage. I like to do it opposite and say, I want to provide all this before you even buy this house. Once you buy the house, I have this great team that's going to execute, and they're very talented underwriting, processing, loan transaction coordinator that know exactly what to do. But where we can be helpful is getting your pre-approval done way in advance, giving you options, taking the time to work through your budget and make sure it lines with what Troy's showing you and so on. Please use us that way. It's not a bother. We really welcome that because it makes everything more efficient for you and everyone else involved.
All right. Thanks, my friend.
It's great.
For joining me.
Yeah, thanks for having me.
Hopefully this was beneficial to all of you out there in internet land. And if you ever need somebody to help you with a loan, if you're looking to relocate here, Joe's your guy. All his contact information is in the description below. If you need some help in being able to find a home, again, I'm a top producing realtor in the area. All my contact information is in the description below as well. And if you like this new format, this new studio, these surroundings, I would appreciate a thumbs up. And please subscribe to my channel so that you can be notified when brand new episodes go live. Because again, we have episodes going live once or twice a week. You're not going to want to miss them. So again, it was great to be in a new surroundings. Till next time, everybody, take care, and I'll see you on the next episode.